which could be more than all your profit. It takes a deal from making money to losing money.
Yeah, I mean, you think about small businesses that are struggling. It's so nice to be able to say, I'm going to be able to save you.
So here we are. This is the Utah Business Spotlight. I am your host, Peter Anthony. Man, you got to hit like, hit subscribe, share, because I have with me today one of the coolest guests ever. She's my friend, but she's also the person who gets your business's money when you're doing real estate deals for commercial. Man, she's Emily Magill from Intercap Lending is crushing it right now. They're changing the way money flows through Utah. If you want to get money for your projects, you need to know people like Emily, and I'm really excited to have her here. I'm going to ask her a ton of really tough questions. She's going to hate me, but she's got to get you money. You need money. No money, no deal. Emily, welcome.
Yes, thank you. That was an amazing intro.
An amazing intro. But it's true, man. You bring money to the table, and that's the hardest thing that, most, I believe, because we work with so many, I'm the guy that they bring in to market the deal, right? And I'm like, well, okay, cool. I totally need you to market the deal. And marketing totally makes sense because it creates more value. When you have it well marketed, it has more value. But it's so interesting speaking to developers that they don't actually have the majority of them deal flow, but not money flow. They forget to create a relationship with you. Talk to me about what is the big problem that you're solving and your company's solving in the market today?
Well, I think that it's easier to solve problems in commercial lending in Utah than it is in mortgage lending, only because there's such a lack of funding. There's such a lack of players. And so, especially in this environment where rates are higher on residential lending, not as many people are buying. That's why we decided to launch the commercial channel, is because we are able to bring strength to that world. And it is insane to me how many people come that have really strong borrowing characteristics, really great scenarios, and we can easily fund them, but they've had so many problems getting funding. And so that's really exciting in and of itself.
Yeah.
I mean, oftentimes right now we have a lot of people that had loans that were fixed that are coming called due that were taken out during COVID, like the 5-year fixed, and now they're being called. Mm-hmm. And a lot of these people are coming out of, 4 and 5% interest rates and going up to 9% or 10%. And we're able to refinance them back into like high 5s, low 6s. So that's really rewarding.
That's very, well, it makes all the difference. I mean, the difference between a 5 and a 9 is almost twice as much in your payment, which could be more than all your profit. It takes a deal from making money to losing money.
Yeah, I mean, you think about small businesses that are struggling. It's so nice to be able to say, I'm going to be able to save you, 40% of your payment.
Wow. So cool.
It's way cool.
It's way cool. And so let me ask you another question. Intercap is how do those commercial deals work? Are they just for land development? Are they commercial for small businesses? What does that look like? What's something like that look like? Really, who's the client is what I'm asking.
Our focus is anything that is real estate collateral.
Collateral.
Like if you have a bakery and you own your building, then that's obviously ideal. We can do SBA loans that are not real estate inclusive, but our preference is for them to be real estate inclusive.
Super smart. Let me ask you a question, because I want to tell them, if I'm soliciting you, remember when you're going for a loan, there's a component of marketing that you're going to have to do to the people who are going to lend you the money. You've got to convince them that your deal is a good deal, so it's got to look great. One of the things that I would do is if you own a salon or a bakery or a restaurant, why not try to own the property?
Yeah.
Right?
Yeah.
So that you could get a loan from somebody like you, or I can buy the property, build in some business, some tenant improvements, because then I become my own landlord. So I can build in my own tenant improvements into the real estate loan that's secured by the fact that I'm renting. The business is going to cover the loan.
Yeah, exactly. Like we had a client that owned a restaurant and she bought out the entire plaza where the restaurant was. And then she rents out all of the businesses around it. And so she's basically in her restaurant rent free because all the other units are paying for her
My
rent.
point exactly. That's
Brilliant.
cool. That's cool. And those deals exist all over Utah right now because there's so many small shopping centers that you can create a deal like that. So if you have a really sexy restaurant and it's making money, then consider owning the center. If you have a really sexy salon that's making money, consider owning the center.
Yeah.
I love it.
Well, and we don't just lend in Utah. We can lend in most states. There's a handful that we can't, but we can do commercial lending anywhere, just about.
Really? Interesting. Because now I'm thinking like I have a whole client list of out-of-state people that I'm going to connect Emily with. I'm like, oh, cool, I've got a lot of deals for you. And that's a thing. When you become creative, when you're creatively, when you're understanding how to create deal flow, right? What needs to be there, the components. You guys are very creative with that.
Well, and deal flow and marketing, I mean, you're making me think of so many different things, but like with the development, how you were asking me about that. One cool opportunity that we have with developments is we can fund the horizontal, so we can fund the acquisition and the development of the land, but then we can come in and we can help them sell off the portions of that development, and we can fund the builder. So if you have a $100 million development and then you're going to be selling off 5 communities at 20 million each, I mean, I'm just using nice round numbers, but you're going to sell them off at 20 million, then we could come in and fund each neighborhood for the 50 million for them to begin their vertical to build all the homes. And then the residential side of Intercap could come in and
do the mortgages.
Yeah. And there's a lot of marketing that's needed for that too.
You guys are triple dipping. but that's what creates the value in the deal for you. That's the incentive. It's like, if I can get this developer up and going, I'll do their horizontals. I know I'm going to make money in each stage of their development. So I'm anxious to make sure that each stage is profitable for them as well. And that there's speed to that money because I'm vested from concept to completion. That's one of the things I like about what Intercapital is doing. It's really cool.
Yeah.
And you're always thinking. Like you've done so much in your business. Tell us a little about who do you feel your best client is right now? Like who's the client that you'd really love to work with, that client's group?
I think that an ideal client for me is not necessarily a dollar amount. I think when I think of that, I think of the book, The Ideal Team Player, where they say that they have 3 characteristics. They're hardworking, you know, they're hungry, as they say, they've got grit. They are humble and they are driven. And I think that that's what I want. I want somebody that's going to share the goal, not basically be incooperative or uncooperative and then complain the whole way. You know, I want somebody that is excited about the project and sees the vision and works well with others, because I really care about my clients. And when they don't care or they complain or they get angry, I think that that's hard. Whether it's a $65,000 residential deal or a $200 million development deal, I think that they both carry the same regard for me. Because it is about the money, but it isn't about the money.
Yeah.
It's about the joy and the people and the reward of making dreams come true, whether it's the American dream or bridging gaps for business owners to go next level.
I love it. And I think for me, when I'm looking at, because so many of my friends, they start deals and then they ask me, can you help me raise money? Right? I just, that there are certain people who are really good at those things. So obviously we create, our marketing company creates the websites, the pitch decks. We tell the story as it moves to the future. This is the future home of these houses or this apartment building, right? So we're presenting that to the world, and that's put us in touch with some people who have needs, and the needs are money, right?
Yeah, that's really good to know that you do pitch decks, though.
Yeah. We're great at pitch decks.
I could definitely send you some
Yeah.
referrals for some pitch
Oh,
decks.
cool. We love referrals. You guys use us. We're awesome. But we do, so when you're developing a pitch deck, all you're doing is developing a story.
Sure.
You're telling the story as it relates to the person buying the story, not as it relates to the team writing the story. So often they want to say, hey, and I'll give you a pitch deck as an example. It's like, well, we want to show the world that we have a really good board of directors, right? So it's like you're going to put those 5 people on, right? Here's our advisory board. Here's the CEO and the CMO and the CFO, and these are their educations, right? And those are really important things. But what you want to do is you want to tell the story of that person's vision for the future of your money. Because a pitch deck is designed to get dough, right? So I want to say, why is this the team that you want to invest in? Why is this the team that's going to actually make you money? Why is this the team that you're going to want to invest in a second time, which presupposes that you've already invested with them now?
No, it makes complete sense. I mean, a lot of times I think about how bridging the gap, particularly with commercial, but even with residential too, so much of it is presentation. For example, this is burned in my brain forever. Or as the kids say, it's rent-free. I had an underwriter tell me that he wasn't going to give me a USDA endorsement that I needed for funding on a loan. And he and I kind of had a heated conversation, tense conversation about it. And he said, well, let me call USDA and see what they think. And he called me back and kind of smugly said USDA doesn't like it and they're not going to do it. Well, having tenacity, I, of course, had to call USDA as well and talk to the same person and present the same deal completely different to where it sounded like a completely different deal, but outline the important facts that I saw in the deal. And she said, yeah, of course we would endorse that. I said, perfect. Will you send me an email that just kind of highlights our conversation so that I could show the underwriter for peace of mind?
Sure.
And I emailed it to him
Smart.
and I called him back. And very sarcastically and happily, I told them, we can do this. And so when you're saying that you do pitch decks, it's so funny because some of these deals that we have for commercial, they'll put their vision on paper, and I'm looking at it thinking,
Yeah.
I see it, but I don't know if we're really presenting it right. And so the fact that you do pitch decks is so cool.
Well, there's a syntax to every story, right?
Yeah.
And you want to make sure that you're hitting the syntax. The syntax is the why, right? If anybody's ever watched a Simon Sinek video when he was in Puget Sound, start with why. You want to tell a story in the position that it just makes sense. Like why wouldn't I invest in this, right? Because everything here is the future. This is solid. You want to tell a story that protects the investor and excites the investor. You want to do 2 things, right? Because and I call it the wife factor, right? And what I mean by that is, if I buy this, I'm going to have to go home and tell my wife I bought it. How am I going to position that? So I'm going to try to use some facts and figures, but I'm going to position it like this is a great investment for our family. This is going to make us money in the future. We're going to be able to retire. We're going to be able to buy that house. We're going to go on those vacations. Because and everybody does everything. The way I do one thing is the way I do everything. And the way the world does one thing is the way the world does everything. So I've understood in marketing that telling the story in a way that it's easy to explain, right? So we talk about it has to be simple, fun, and memorable. Your pitch deck has to be simple, fun, and memorable. It has to be simple enough that I can repeat it because I'm only going to remember 10 or 15% of it.
Yeah.
Right? So I want to make the points simple. So we never put more than 3 points on a pitch deck. And then we want it to be fun. What's fun? What fun is, like, I get to go to Disneyland. Disneyland is fun. So I want to tell the story about how you, the investor, get to your Disneyland, whatever that is. So I want to make it simple. I want to make it fun. And if it's simple and fun, if I hit those 2 points, I can easily remember it. Because what you want when you're raising money, you're also simultaneously raising awareness.
Yeah.
Because you don't know who the investor. So if I'm investing in your property, I'm sorry, if I'm investing in your development, I'm the investor in the development. I am probably also friends with the contractors who could possibly work on your development. I'm also probably friends with the builders who are going to build, not only who are going to, the engineers, everybody who's going to do your horizontals and your verticals and your sales. So I'm going to go to my friends and I'm going to say, oh man, I just invested in this great deal, right? And I'm going to explain it because it's simple and fun. I'm going to want to explain it. And I'm going to explain it properly so that they're like, oh man, you just got into a great deal. And if you notice, the deals that flow are always the deals that are easy to explain.
Yeah.
The deals that get caught up, it's always when you're working with a founder or a CEO or the curator of that deal, right? And they're always the ones who are complicating it. So what I find is people who are really great numbers people, really conservative, really, really smart, and they've put together and they've just kind of drained themselves of energy and life to put together this incredible set of numbers and reasons and they want to tell you the 27 points that make this one reason good, and you're like, oh, 27 points, that's awesome. I can't remember 3 of them, so now I'm like, oh, it's confusing, and if a confused mind never buys.
Yeah.
Sales 101, right?
Yeah. They get down a rabbit hole.
Yeah, so you want to just, when you're building out, when you're looking at decks, ask yourself, is this simple, right? And when you're building decks, make it simple. Then ask yourself, is it fun? Is it fun? Is it
And presentation too. I mean, when I look through decks,
it's got to be visual.
Because you really do just pick up the key points. I look at the key factors and I start to see, okay, I think this could be a good deal. Because I consider myself like an advocate and a salesperson for the person.
Well, you are, right? That's a great word. You're advocating for the person you're trying to get the loan for, because you're the person in the middle, right? You're the loan officer, right? So then there's the person who has the money and the person who needs the money, and you're the salami in the sandwich, so to speak, right? You're the cheese between those 2 pieces of bread.
I'm the cheese.
Right? She's a cheese, man. I'm the salami. I'm the Italian one at the table. Are you Italian?
No.
Okay, cool. I'm the only Italian at the table, so I'm the salami. So those are the things that I love what you do, man. And I love that you're so successful at doing it.
Thank you.
What's the future look like for lending and financing and underwriting and putting deals together? Is AI impacting you guys at all?
I don't think so. That's kind of been my coin phrase lately, is when people will apologize for me having to do a lot of paperwork and things like that. I always joke, if AI could do it, then I wouldn't have a job. So thank you for this opportunity. And I also think, kind of like you were saying with the pitch decks and things like that, is I look at them, I summarize them, I see what the key factors are, the key points, and then I try to summarize them in the body of the email, and then I attach the pitch decks with them, and just to kind of plant the seeds on some of the commercial funding deals. But as far as the future, I think that interest rates are ultimately going to go down. I just don't know how fast. We all wish that we knew how fast. I thought they'd be lower by now. I do think that a lot of people that are not buying right now, that are waiting on the sidelines, will be in regret for not buying.
Yeah, there's a fine line, right? Because you're in this moment of quantitative easing where they want to slowly come down, but they don't know how fast or how slow to turn on the spigot, because they don't really know. And AI is one of the culprits, right? Is AI going to replace the job market? So if we bring it down too fast, then everybody's going to start borrowing more money because it's cheaper, and you borrow more when it's cheaper. But then if people start losing their jobs and they borrowed too much money, they're not going to be able to pay it back. That's going to be a train wreck. So anybody who's watching or listening, it's okay if they're going slow, but I love what you just said. They're going to go slow, so don't lock yourself out of the market because you think that they're going to go back to 2% interest rates, because they can't. It's not the way, not in the current state of the economy. Once AI thing goes, maybe 2 years from now, we'll say, oh, okay, cool. Here's the jobs that AI replaced. Here's the jobs that AI created. Don't think that they're just going to replace jobs. It's going to create jobs too.
Yeah.
So I love that, and I love it. You got to jump in now.
Yeah.
Even if you're paying a few dollars more, it doesn't matter.
Yeah, I think you've got to jump in now. I think that if you can, you should. And I think it's really exciting to see some of the developments that are popping up in Utah and some of the surrounding states. You can tell that investors bankers, developers. I mean, so many parties to the transactions can really see the writing on the wall.
Yeah, it's Utah's doing well. We're pretty blessed here. I'm very,
Oh, yeah.
very grateful. Tell us a funny story. I want to hear a funny story about a loan that went bad and why it went bad. Everybody talks about the loan that they got, but tell me one that got away where it was like the owner's fault. It's like, dude, we wanted to give you money. We couldn't have put a bigger bow on the package, and you wet the bed.
I think that one of the funniest, they're not funny at the time, but they're ironic, is when people go and take out huge debts while they're buying a house and they disqualify themselves. And then they blame you. For example, I had a gentleman that was buying a house with a huge shop, so he went and bought an F-350, brand new, super expensive. And the payment disqualified him for the mortgage to buy the house that had the shop that he was planning on putting in the truck. And he was yelling at me that he can't qualify. And I'm thinking, well, your truck payment is as much as your mortgage payment was going to be.
Hi,
what are you thinking?
Right? It's so
Or
funny.
another was.
But you don't know that. People don't realize that even though you can afford it, the way you're underwritten, it's about debt to income ratio, and debt on your books looks bad. Now, is this true? If you would have put that truck in the business's name and it wasn't coming through his personal, it wouldn't have showed up on his personal, he still would have qualified for the mortgage.
He still would have qualified. And the other, on the counter side, like with a commercial loan, oftentimes it's about the debt being able to be paid with the revenue that the business makes. And so it is kind of the same principle, so to speak, which is also interesting too, is when people want to buy a business or a building or something, and we're looking at the incoming money and we're showing them their payment and they're still excited, and we're thinking, you're going to lose X amount of dollars per month. How are you still excited? We thought this conversation was ending about now.
And they're like, no, I'll take it.
Yeah.
It's so funny. And because I think our society is conditioned to love the word yes, right? It's like, no, like I'm never going to get a loan. And then they just jump in and they'll take it at any rate, which is why credit card debt's so high, because they're like, oh, you're giving me money. And I tell my kids that no one's giving you anything. This is a bad deal. You don't buy a depreciating object at 24% interest. It's just a stupid deal. Don't do that.
Yeah.
And it's very hard to explain because we're in a consumable society, right? Like we want to consume. So I love that. He bought an F-350. What was he thinking? And he was probably super angry.
I don't know. We had another guy that bought a timeshare right before he closed, and it disqualified him. We had already signed when we found out that he had his credit pulled for a timeshare, and it was a funding condition to do a soft pull on his credit. And when we did the soft pull, we had to call him and ask why these people had pulled his credit. And he said, oh, I just bought a timeshare. We got the terms, and he no longer qualified. So we had to basically reverse the entire loan.
What's the easiest way to set up so that you're almost guaranteed to get the loan? How should you set up your finances? Being debt-free today is difficult.
Oh, I would say it's almost impossible for most people right now. It depends. I mean, if you're self-employed, it depends on what industry that you're in. Oftentimes it's not a matter of if we can get the funding done, it's just a matter of how. I have a client right now that we're changing programs for the third time because their circumstances keep changing. And we can do some pretty wild things. Like in the commercial world, it doesn't really matter usually what your credit score is. It matters more performance, what your business has done.
Sure.
On the residential side, we have some even funky loan products for people with low FICOs. We have really aggressive products for jumbo. I think in this entire year to date, I've had one loan denied.
Wow. Yeah. That's pretty crazy.
And
That's great.
We're actually re-apping it, and we're going to close it. So
you have 100% acceptance rate this
we could
year.
just almost delete that comment.
Yeah.
Cool. Sometimes we'll take like a preliminary application and they won't qualify.
Is it is a loan predicated? Here's a question that a lot of people ask, I'm certain, right? Is it one, will they take one credit score on a married couple, or do they combine the two?
They take the middle score of both of them and they use the lower of the two.
Oh, so if my wife has 800 credit score and I have a 650, that's not going to help me get a house. No. So.
Not with most investors. There are a couple of investors that will allow the higher score to qualify, but for the most part, no.
Okay, so she better stop paying my bills.
Yeah.
You hear that? You got to pay my bills now. I'm done giving you the space. So but that's fun. And there's things that people don't know, right? Because people think that they're gonna, like if they protect one credit score, they can screw up the other credit score. That's where I was getting at with that. I was being playful.
Yeah, I mean, and there's other things that we can do. Like, I mean, it's a really sweet story. We just barely had a client where he definitely didn't qualify, but we ran him through a simulator and we saw that if he did some pretty simple things, that we could jump his credit score by 107 points approximately.
Wow.
And we did it, and not everybody does what I tell them to. Shocking, right?
Shocking.
Not everyone follows exact instructions. Weird. But he did everything that I told him to, and he was so grateful to me. And I just told him, I'm so grateful for you and proud of you, because he took himself from completely not qualifying to completely qualifying, and bought a house for his young family. And it was just such a sweet
That's awesome.
scenario. I loved it.
And that 107 points, how long did that take? How many days? A 90-day program?
Well, if he had done it as fast as I had wanted him to, it probably would have taken 4.5 to 5 weeks. It took him 3 months, but it was because he had to come up with a little bit of money to pay down some stuff. But I was just proud that he stuck with it.
Yeah, that's great, man.
And followed it through until he...
107 points is a lot in 3 months.
Yeah.
That's really a lot.
Yeah.
Yeah, you had to pay down. That's really cool. And you have a simulator that'll do that?
Yeah, so we have a couple of different simulators. We have a what-if simulator where you can just say, like, crazy things. Like, what if they went and got added to a $10,000 credit card? Or we have another simulator where you can go into the existing components that are on the credit and play with the algorithm and say, like, what if this was deleted? Or what if this happened? And or you can also go in and say, what if we want to get to this credit score? What would it take? And sometimes it will just send you a frowny face. And it's like, there's nothing that can be done right now.
I love that. Don't send me a frowny face. I love that. That's so much fun. And I think what you do is so cool. And you do it on the residential side, now on the commercial side, and you're killing it commercially. And is the commercial your main hustle?
I would say that I'm pretty 50-50 right now. I would say that the commercial are more labor intensive per transaction, depending on the transaction. But then I have more residential transactions going right now.
I love it. I love it, man. Well done. I'm so proud of you.
Thank
You're
you.
killing it,
I'm
girl.
proud of you.
Well,
You're making pitch decks?
I've been making pitch decks. I'm generally, when they hire my company to make the pitch decks, they very often hire me to pitch it because I'm the non-emotional person from the front of the room.
Sure.
So yeah, we have a really,
No, I've seen some good pitch decks. It's nerdy how excited that makes me that you do pitch decks. I'm gonna start telling people to call you.
Yeah, it's fun. It's fun to see, and it's interesting because people think that because you charge a lot of money, that you're going to make this big pitch deck, and you pay the money to keep the deck small.
Yeah, you can have it be a snooze fest.
Yeah, you do, because anybody can add all this stuff. What you're trying to do is find the right stuff to keep so that it becomes simple and fun and memorable, because you're going to, so here's a tip for people. If you're going to build a pitch deck, or you're going to speak from the front of the room, right? Pitch deck, or, my background is speaking from the front of the room and selling, the one-to-many. When you're doing something like that, the person's determined that they want to buy your product within the first 30 seconds to 12 minutes. Mm-hmm. And then everything after about 12 minutes, you're unselling them. Mm-hmm. So if you
believe that.
So if you do a nice 45-minute pitch deck, the person who is willing to invest in you in the front, by the end, is not willing to invest in you because you've stressed them out, and the confused mind never buys. But also that stress level, they're like, oh, well, and you say, well, we've done 24 market studies on this property, and each one of these say this, this, and that, and and we want to be fully transparent and tell you about the bad ones too. Well, when you introduce something bad, right, you're not being fully transparent. You're just telling them that, because everything has two sides of a coin. It's like they said at one point, don't eat margarine, don't eat butter, eat margarine. Now they say don't eat margarine, eat butter. So you don't know at what point you're going to fall in. You've got to present your deal in the best light for the deal and keep it at that high level, because you have to show that you have so much confidence in this deal that you believe in it. And that's it, man. Pitch decks are fun. Everything that we do is fun. Everything. But I think there's a grass is greener, right? The grass is greener is always like, I look at what you do and I'm like, I should have gone into lending. This is so cool. Look at what she's got deal flows and people are coming to her to get money. Man, that's the best place to be. And then she's like, oh man, you do pitch decks? We need pitch decks. I think they're so cool. I love to nerd out on them. I think that we're always going to have that grass is greener syndrome. So thank you for coming again. I love, love, love you. Your backstory is super cool. We're going to tell that one day on the podcast. But not today. Today is Utah Business Spotlight. I'm here with Emily Magill, and she's with Intercap Lending. Man, they're crushing it.
Thank you. Thank you for having me.
You're welcome.
I adore you, and I appreciate it.
Where can we find you?
My website is www.emilymagill.com, EMILYMAGILL.com.
Excellent. So if you want to get real money, real fast, she's going to be candid with you, but you're going to get the dough.
Kindly candid.
Kindly candid. This is Peter Anthony. This is Utah Business Spotlight. We'll see you in the next episode.